All right. Good afternoon, everybody. Today, of course, is March 29th, 2018, and our regularly scheduled webinar. And of course, it's also the final day of March, which also happens to be the first quarter of the year. So the market really isn't looking too terribly well to start this year off. Now, because of that, what I really want to do today is I'm actually going to present two PowerPoints. Instead of looking at the shorter term charts, what I'm going to do today is just want to make sure, guys. Okay, good. Everything seems to be working. What I'm going to do today is actually look at longer term charts. All right, because as I said, we are at some significant levels here, really in all major markets. And you know, at this point, there's a possibility we have a fairly deep pullback. So that's what we really want to be monitoring at this point and be aware of, okay? For example, we're looking here at the S&P 500. This is the monthly chart. Yesterday, we closed at a 2605. The upper band is 2554. So you can see we're about 50 points above that upper band. Now, other time frames, we have closed underneath the upper band. Okay, so to me, if we close under it on a monthly chart basis, then that is denoting particular bearishness. And you can see here on the weekly chart that we really took out the upper band, and guess what? We closed back below it. All right, so points of support are probably, I mean, when you look at this chart, we're basically trying to hold the 50 EMA, okay? That's where it bounced back in February. And we're back testing that level again. Now, if that level gets violated, I think there's a very strong likelihood it drops to 2200, which is another 400-point drop from where we're at right now. And if the 200 EMA can't hold, then, well, what's going to happen? It'll probably drop to the mid-band, which is about 2100. And here's the composite. Again, monthly chart upper band is 6512. The composite is still a good 400 points above that upper band on the monthly chart. But here again, we look at the weekly chart. It had breached the upper band, actually breached it twice this year, and now it's back below the upper band. So again, that's denoting bearishness, and we know that, okay? Unlike the S&P, isn't quite down to the 50 EMA. Now here's the 10-year rates. So you can see from this chart, the 10-year rate has been in a long-term downtrend. Okay, and what we're getting here recently is a rally back. You know what? Let me see. Andrew, can you see my screen now? Oh, okay. Sorry about that. You know, again, let me just kind of, good. I'm glad you can see it. Let me start back from the beginning. I'm not going to go over short-term charts today, okay? And I'm going to look at all the longer-term charts, both the monthly and the weekly. And to me, there's very specific reasons for that because, you know, I do feel we are at some very, very key levels in the marketplace, okay? And I think we need to continue to monitor these levels and monitor them because, let me go back here and show you. Because here we are again, you know, here's the cues, for example, on the weekly chart, okay? You know, we've broken below the upper band, got to just above it, and we've broken below it. Now, typically what happens with this pattern is You can see the ADX line is heading down. The PPO has already started to spread. Okay, MACD is negative. So in my mind, there's still more room on the downside. The first level of support is the 50 EMA. The S&P 500 has bounced off its 50 EMA twice now. All right, now the question is, does the NASDAQ composite get down there to retest the 50? And again, if the 50 doesn't hold, there's a lot of room between the 50 and the 200 EMA, which is the next line of support. I mean, if it broke through the 50, we'd be looking at a drop to about 120. All right. Now, again, here's here's the 10-year rate. You can see the monthly chart. It has been in a downtrend. And it's interesting because everybody's going kind of crazy here over the fact that the Fed, claims they're going to raise rates 4 times this year. But, if you look at this chart, the rates have, in my mind, have just about peaked out. And it wouldn't surprise me if they change their thinking. And maybe they only get 2 rate hikes this year. And these rate hikes, as we know, have been very de minimis. So, I mean, I don't see the rates going from 3 to 6% anytime soon here. All right. And then here's the weekly chart of the 10-year rate. All right. Now you can see it bounced up to almost 3, hit almost the upper band. Okay. And, now it's starting to pull back slightly. All right, now here's gold. I'm going to show gold and the monthly chart here of gold. You can see, again, it's in this really long-term trading range. I just don't find gold terribly exciting at this point. I mean, it's just, it's one of these markets that, I keep looking at and saying, well, when's it going to break out or when's it going to break down? And it just continues to trade in this long-term consolidation phase. However, having said that, as you can see from the weekly chart, the metal itself has moved into an uptrend. Okay, so I think any pullback's probably going to come back down to no more than 1250 area. And then we look at Apple. Monthly chart of Apple, 157.25 is the upper band. 166 is where we closed yesterday. So again, I think this is very important because, again, this is the long-term monthly chart. If Apple does close under this long-term monthly chart above the upper band, I think that's going to help, that's going to also kind of confirm that you'll see the QQQ and the NASDAQ market most likely continue its path down. So Apple, again, is a major prognosticator for the overall market. And then here's, again, the weekly chart. Now, again, it never really breached the upper band. It's bounced off the upper band twice, as you can see from this chart. And then now we've kind of had the retest failure. Even though it made a new high, it never really did hit the upper band. All right, here's oil. This is, again, the spot price. Mid-band on the monthly chart, 56.33. We are above it. Okay, so again, that to me is bullish. But now, right now, we scale down to a weekly chart, and a couple of things are going on here. Okay, one is the fact that obviously the Chaikin money flow is still positive. We are slightly above the mid-band. As of yesterday, the close was 64.38. I'm sorry, this is wrong. The mid-band is actually 64.48. So you can see it's struggling to hold that mid-band. And we'll look at the live chart later, see where it's at. We just go down to the XLE. Again, XLE weekly, this is in a downtrend. Okay, and it continues to bounce and trade between that the 65.39 line, and then the 68.5, 68.75, I believe, are the 2 lines. Now, that's what I wanted to cover. You guys obviously are privy to before I get into this, let's take a quick look at oil. Okay, so it's 64.38, still holding there. Oh, I'm sorry. You know why? Because the market's not open. And the XLE is bouncing a little bit. All right. Because, I'd like to see, by the way, what I'd really like to see here is a clean violation of this consolidation area. And then, we retest the upper band. And again, I'm kind of biased for that price move to happen like that. Okay. Anyway, that's what I wanted to cover from the longer term perspective. So now what I want to do is kind of change the topic a little bit, okay? And I want to talk a little bit about swing trades and intraday trades, all right? Because this is really very compelling, okay? And very interesting how we can isolate these particular setups. Okay. For short-term trading, we want to look at basically two setups. We want to look, obviously, at the price trend, and we want to look at the violation of the prior day high or low. And today, I'm really not going to get into the violation of the prior day high or low. Today, I want to really focus on the first setup, which is the price trend. Now, as you know, we came up with that, what I term the setup, a while ago. And the setup was simply when the 30 and 60-minute charts are an uptrend, okay, you simply want to wait for the 10-minute to cross to an uptrend and then buy the first pullback. And typically, off the 10-minute. And typically what happened in that situation is you tended to get a nice acceleration of the price move. Okay, so again, that to me is also another very valid short-term, if you will, either intraday or swing trade setup. Now I want to just talk about something that's a little bit different. In this particular situation, what we're looking at are stocks that are in an uptrend or a downtrend for that matter on the 30-minute chart and the 10-minute chart, okay? And again, what we're going to do is, for a bullish setup, okay, obviously we want the 10 and the 30 trending up. For bearish, we want the 10 and 30 charts trending down. And very simply, the trend is defined by the 200 EMA versus the 253-day simple moving average relationship. So if the 200 EMA is above the 253, the trend is bullish. And conversely, if the 200 EMA is below the 253-day average, the trend is bearish. Okay, and you want the averages to be in the same formation on both the 30-minute and the 10-minute chart. All right, so let's take a look at some examples. Now, here's March 21st. And again, these are all fairly recent examples. All right, here's the SPY, or the S&P 500. You can see here where back on the 21st, it basically crossed into a downtrend on the 30-minute chart late in the day. On the 30, it was overbought, okay? And if you look at this chart, I mean, a couple of things that are kind of interesting here. I mean, first off, you can see how these averages are spreading. So to me, that's denoting bearishness, okay? And again, once the S&P on the 30 had crossed down, we had two instances where, okay, it was overbought. Now, if I scale down to a 10-minute chart, okay, you can see that the 10-minute was in a downtrend. And if you go back to that late day setup at around 2 o'clock, actually got overbought this whole time too, but it stalled right here at the mid band. And if we look at this chart, basically in one day, it dropped from 27.39 to a low of 26.41. So that's a really nice drop. What is that? Almost a 100-point drop in one day. Now let's look at the next day, which is the expiration day. Okay, and again, remember, 22nd here is a Thursday. So now we go to the 23rd, okay, and we see on the 10-minute that we had a bearish gap, clearly up here. You see that the 10 trend is down, okay. And again, we know that because the 200 is below the 253. Both of them are slightly sloping down. Okay, but here's the problem. Okay, now it gaps down on the gap was on the 22nd. Gaps down here on the 23rd, which is the expiration day, and it's oversold all day. So the $1 million question is, okay, how do we get in this trade? How do we get a viable place or way to enter a stock that's overbought? Okay, and again, we have two scenarios here going. We know the 30's in a downtrend, and we know the 10's in a downtrend. So really, we're not really thinking going long here. We're thinking going short. But again, the question becomes, how do we enter it? Okay, so now we go back to, we scale down even further. We go down to a 3-minute chart, okay? And I've got a 3-minute chart showing 2 days worth of activity on the 21st and the 22nd, okay? And again, this covers the entry on the 22nd, okay? And there was also an entry on the 21st. So we have a couple of valid entries here. Valid entry number one is on the 21st, price was at the upper band on the 3-minute chart, and we've got the 10 and the 30 in a downtrend. The next day, you can see where the 3-minute crossed into a downtrend, and then we had the rally back right before the magic 2 o'clock mark. Okay, the SPY stalled at 268, dropped into the close to 263, or about $5. Now, what's interesting about this is the 260 put that expired the next day went from $1.40 to almost $5 in basically 2 hours. If you caught the move at the upper band from the day before, it was roughly $1.70 to $5. So that's a really strong. Actually, it would have been more if you held it into the close. These probably would have been $5 at the open. These probably went to $10 because you can see it closed at 263. Okay, roughly 263, 264, and that's the 273 put. So that's about $10. So if you held this the whole way, those went from under $2 to most likely around 10 in a 2-day movement. Now, again, we're experiencing some tremendous volatility here. Okay. Now, we follow the same logic and we get to the expiration day, all right, which is Friday the 23rd. Again, the only opportunity to short off the 3, and by the way, this became opportunity because the 3 is in a downtrend, and we know the 10 and the 30 are in a downtrend. So right around the magical 2 o'clock mark, the at-the-money 260 put could have been bought for 70, and they went to almost 6 into the close. Now, here's another example, Google. Now, you can see Google crossed into a downtrend here, okay, back on the 21st, all right, kind of bounced off the lower band on the 26th. It had the rally up to the intervening high at 1064, and honestly, sort of like the major market, there were 2 overbought conditions on off the 30-minute. And by the way, this entry here, to me, is a really good entry. And I say that because at that peak, the money flow was negative. So to me, that kind of enhances the trade on the downside. Okay, so now again, we scale down to a 10. We see the 10 in a downtrend. Okay. Clear cut downtrend. 23rd, of course, is expiration day. And the question becomes, again, how do we enter? I mean, I like entering, off an overbought condition off whatever time frame you're looking at. So now we scale down to a 3-minute. Now we see two valid entries here, actually in 3 days. Okay, we've got the entry at the upper band, okay, which that put, okay, went from 1030, the 1107, which is about the at the money put. That put went from about $10 to $82 in 3 days. Okay, then, if you miss that, there were actually two subsequent entries. Okay, we had the entry here roughly at 2 o'clock on the 22nd, which was at 1073 high. And then we had the 2 o'clock entry here on the Friday of expiration day. And here's the point. I mean, this trade here, that late day trade at 2 o'clock went from $5 down to up to 30 in basically 2 hours. Okay, now here's a very key point. Okay, on weekdays, we expect the close to be towards the low end of the bar. Okay. Conversely, on strong days, we expect the close to be towards the high of the daily price bar. Okay. So this is why if we can isolate what constitutes a weekday or a strong day, okay, then we know that typically that late day 2 o'clock entry should produce some decent returns. And again, what makes that to me so compelling is that the risk factor is fairly small. Yes, there's obviously a chance that you could lose the entire investment, right? But the point here is that because you're paying so little for time, that it's going to be pretty much the cheapest those options are ever going to be had. Obviously the closer you get to expiration, the less time premium you're paying for. Okay. I mean, yeah, it would be even better if you could enter at 3 o'clock, because then you'd probably be paying like nothing. Those Google puts probably would have been like 35 cents. All right. But anyway, here's the point. We've got Goldman Sachs here. You can see where it crossed into a downtrend. Okay. Here's the 10. 10 was already in a downtrend. Okay. At 2 o'clock roughly on the 21st, it was right up against the mid-band. You can clearly denote the downtrend here. Okay. And then, if you just looked at this deal, the at the money put went from 220 to 1970 in basically a day and 2 hours. Now, I don't have a chart here for the day of expiration, but this is expiration day. And I'll hazard a wild guess that at this peak on the 10, it was probably overbought on the 3. So you probably could have gotten into that late day. Now here's DY, same situation, crossed into a downtrend on the 21st, was overbought. And up here we can look, completely negative money flow. Yeah, completely negative money flow. Now we scale down, and this is what we see on a 10-minute. Okay. We see the downtrend. Okay. We see basically complete negativity here as well. And down here, I have a little note because I say I would consider doubling the position size if the CMS is negative at a top. So we basically look here on the 21st, we had an entry, had that late day entry too, 113. And here's the nice part about this, because, you know, we're kind of buying puts right up against the mid band, not the 10. So what I would do is, you know, you can basically use that as a stop loss level and think, well, okay, if it breaks through it and starts to run higher, then you close the put position. You get out. But, you know, with the 30 in a downtrend, the 10 in a downtrend, the expectation is the price is going to go lower. So you can see here on expiration day on the 23rd, it was well under the lower band. It got a very meager bounce, and once again, it closed towards the low of the daily price bar. And here's okay, this I did have a 3-minute chart on. If we scale down to the 3, we see on the 3 we had the upper band sell on the 21st. That's when it was up against the mid band on the 10. Okay, and then you look at expiration day, and yeah, at that 2 o'clock time frame, it was overbought, and it dropped from 106.62 down to call it 104. So that's still a conservatively a $2 drop. And then here's Tesla. Now this to me is a cleaner downtrend, because look at how long this has been a downtrend. Clearly going down. You see the beautiful trend. You have the 200 under the 253, both of them sloping down. Okay, the first time the 30 got oversold, or overbought, I should say, was here on the 21st. So this was the Wednesday. 23rd is the expiration day. Okay, we scale down to the 10. We see the 10. Let me erase this. The 10 likewise has been in a really weak downtrend, or I should say strong downtrend. And this pricing, by the way, is 250. This was the pricing for the current week puts, all right, when entered on the 27th. So again, that's why the options are so high, but the question is, could you have gotten into this on the 23rd? And I don't have the 23rd. I don't have the 23rd here, a 3-minute chart of the 23rd. Okay, and here's another interesting phenomenon. I mentioned this before. We've got an intraday high on the 21st that was above the prior day high, all right? And the 10 and the 30 were in a downtrend, okay? And the 21st, okay, is when it got overbought. And you can look at that, the $300 put, which was roughly $22 out of the money, that went from $5 to around $40. And probably if you closed it down here, it would have been worth even more. Okay, final example. I think this is the final. This is Apple. You see the bearish cross. We've got Apple in a downtrend on the 10, continuing to make new lows. Got overbought here on the 22nd. And look at that. It went from 172 down to 165 in basically a day and a half. We scope down to the 3. We see the 3 in a downtrend. The 3 was overbought at the 2 o'clock time frame on the 22nd. And then again, late day on Friday of expiration. So this to me is a sexy trade because it dropped from about 170 down to 165, right, which is what, about a $5 drop in 2 hours. And again, the move starts at 2 o'clock. Anyway, that's what I wanted to show today. And, you know, the next webinar, what I'm going to do is talk a little bit about the other setup, which basically is a new low. So what I've been able to do here is on stock charts now, okay, I can physically run, you know, all the stocks that are in the uptrending or downtrending formation on the 10 and 30 minute. And then what I'm also looking for is a stock that makes a new low early in the day that also has the 10 and 30 in a downtrend, and then conversely for an uptrending stock. And the theory being here that, to me, those are stocks that should denote tremendous strength or tremendous weakness. Okay. For example, let me just take a quick look here. All right, Amazon was one of them. Okay. So we look at Amazon, made a new low today, okay? 30-minute clearly in a downtrend, 10-minute a downtrend, okay? Now, at this point, it's been underneath the lower band, low of 1365, okay? And it's been making the bounce from the lower band. So now the question is, we've got basically an hour and a half. By the way, I thought the market closed early today, and I think I wrote that in the update, but I was wrong. The bond market actually closes early today. The stock market is open all day. So now we scale down to the 3-minute chart. Now, again, we see the 3-minute in uptrend, okay? We're approaching 1 o'clock here. All right. Now, here's the thing. If Amazon can remain in a downtrend on the 3 and it's overbought, this is probably a decent short. Right. Now, again, this has been, a lot of these stocks, by the way, have been so oversold that I'm not sure where they're going to close today based upon their daily price bar. So, for example, if I look at Amazon, okay, we look at Amazon. Now, look at what's going on here. It's basically trying to form a doji bar. It's made the new low, okay? The low for the day is 1365. We're trading right now about 1450. Now, to me, the logic still says, you know, the best opportunity to profit right now would be to simply wait for that 2 o'clock time frame and see if we get an entry. We also have the lower band here at 1421 on the 30-minute. Another stock that basically made a new low and has been in a downtrend on both time frames is Tesla. So let's take a look at Tesla. Tesla's been really selling off hard. Okay, this one actually did close below the lower band on the 30. Here's your 10-minute. 10-minute is overbought right now. I scaled down to a 3-minute. Okay, and it slightly took out the mid-band. Still overbought. So what we really want to see here is maybe a pullback to underneath the mid-band on the 3, a rally up to the mid-band. The 3 stays in a bearish formation. And then it starts to sell off against the mid-band. That would be a pretty nice setup. Because there's a lot of room here. You know, even if it didn't close at the low of the daily bar, okay, if it dropped 50%, that 50% is it's about a $25 move anyway. So that's a pretty strong potential move. Okay. All right, that's what I wanted to cover today. Um, Anybody have any questions? Let's see what the S&P is doing. All right, so we're getting the dead cat bounce here today. All right. Um, so we're going to end up forming a inside day here on the weekly price bar. So to me, short-term momentum is still bearish. I want to show you a monthly chart of the stock here that to me is tremendously bearish. Right there, that's Facebook. Let's look at the weekly chart. Okay. Wow, the weekly's actually forming a hammer. Okay. Now, the question is, where should resistance be? And to me, about the midpoint of that price bar, which is 168, should be a resistance level. I would put it up here. Yeah, what's interesting, it puts it right around the mid band on the daily. And yes, shorter term, I would think that mid band is going to be resistance. Mid band is 160. So day's not over. I mean, I think we'll probably still get a little bit of a pullback on Facebook. Now the 30's overbought. Okay, now this is getting a little sexy to me. But I think in the bigger picture, I think 168 area or this mid band is going to be the area where a longer term short would come in. Yeah, because we're just, you can see here. I mean, Facebook is just oversold. So a bounce would be expected. Okay, uh, based upon the fact that it's been underneath the lower band. Having said that, I would expect a retest of the lower band. So I mean, if this rallied back up into this area, it would probably be a very good short-term short as well. Would have dropped to a possibly 153. Mid band here on the 60 is 176, which is almost the mid band on the daily. So you can see there's a couple of areas of confluence right there. When you have these multiple areas from different time frames, they're usually a pretty good, resistance or support area. All right, so what do we get? It's almost 1:45 here. All right, anybody have any other comments or questions? I'll be looking at Facebook today. All right, let me see here. Let's take a look at Google. Yeah, wow, Google is just sitting there. Now we'll know. I mean, look, to me, this to me brings up really low risk entry points. We've got a 10 in a downtrend. We've got a 30 in a downtrend. So at this point, okay, To me, it's just a waiting game now. Yeah, to me, it's just a waiting game. You're kind of just waiting for the magic hour to end, and then look for the entry around 2ish. Um, the problem today is I don't know how active this afternoon is going to be. With the holiday tomorrow, that's the only misgivings I would have today. Um, but then the other side of the coin is I would think being a long holiday weekend that the odds favor maybe a sell-off into the close today because people really don't want to be long going over a 3-day weekend. So anyway, what I'll do is I'll be looking at these deals for a quick, maybe some quick opportunities later. So we've got Facebook, we've got Google. I don't know if Amazon's going to rally up enough. Let's take a look here. These holiday days or the day before a holiday, honestly, I tend usually not to trade because there's really not a lot of volume. But it may be different today because we are seeing some really nice setups here. All right, so Tesla, let's take a look here. All right, so we've got 3 to look at: Facebook, Google, and Tesla. Let me take a look at NVIDIA while we're talking about these. NVIDIA, downtrend. Okay. Okay, now the 3 is actually crossed up on NVIDIA. So I wouldn't get too terribly excited about NVIDIA. I want to look at these, I want to look at all time frames and see them all in downtrends. Okay, so Goldman, interesting. The 200 just got above it, but it's kind of sitting right at the mid band. But it's oversold. It's not overbought. So again, not that terribly exciting to me. Take a look at Bob. Took out the mid band. Okay. 10 is really weak. All right, so I'd like to see this pop up a little bit before I'd consider a short here. The 30 just crossed out at Alibaba. There's going to be an opportunity on this deal for a short. That's for sure. Okay. Yeah, that's what really does make this kind of nice. I mean, if you're looking at specific areas, of resistance, like we do. I mean, we definitely, here's Google. It's just below the 200 EMA. Okay. If I go back to the chart from before, look at this, the BABA chart. This stopped right at the 200 EMA 2 days ago. So it's really bizarre how many times that happens and how many times that acts as tremendous resistance. And, either it's going to hold or it's not. So, I mean, if you got short there around 192, look at it. It dropped to what, 178 this morning? Or yesterday, actually. So that's a nice drop. That's a $14 drop in a day and a half. That's a nice move, especially when you have the advantage of a weekly option. You're not buying months and months of time here. Either this thing works or it doesn't. That's kind of the beauty of it. All right. You know what? I've been kind of talking a little bit too long. I'm going to close down for the day and kind of get going. But if there are any final questions, shoot them through. If not, then we'll convene again in 2 weeks. And again, thanks for being here. Have a great Easter, and have a great Hanukkah. Or no, I'm sorry, it's Passover. And enjoy the Passover if you do celebrate. Thank you very much.